mystery that I can answer for you about proper trading is being totally prepared when you turn on your computer and the market opens. When the market opened back for me, and I started learning how to trade intraday, this would be back in 99, early 2000, it sounded to me like a horse race, da-da-da-da-da-da-da-da, and you wanted to be on a horse. You weren't sure which one to ride, but you wanted to be on a horse. You might have known the market was gapping up or gapping down, and maybe you had a bias or an opinion of what you felt would happen, and it was always very, very stressful. The critical piece to good trading is to be totally in control of your emotions, to not let the emotions affect you. About CNBC, the best thing you can do is turn CNBC off, put on some light music, have a lot of water next to you. The brain is 80% water. Eat a light meal prior to trading, not too heavy on pastas, don't get too tired. Turn off your private messages, your IMs, turn off your cell phones, tell your family this is your trading time, and totally dedicate yourself to the focus that you need to take your trades. Now, whether that be that you want to trade all day, or you want to trade just a couple hours a day, or whether you can trade, whether you're scanning in the evenings and putting in your trades when you come home from work, it all has to be a routine. It needs to be something that you feel very comfortable doing. So right at the top, the very best advice I can give you in next day preparation is you must establish a routine of which will not change. Your scanning time is your scanning time. Again, your family needs to be notified, because you're going to have a thought process as you go through scanning and preparing for the following day, which I'm going to work with the folks that that we're going to allow into the program, if you will, that we're going to spend time in exactly how to go through the entire process to be able to understand. In other words, one of the first things you want to do, for example, is that if you look at the spiders, for example, today on the daily chart, and I'm going to blow this up for you guys again because this is all part about next day preparation, is that as you can see, we gapped up on Thursday. Okay, Friday market was closed, as you know, for Good Friday. And by the way, happy belated Easter to all of you that celebrate that holiday, and I hope you had a wonderful time with your friends and family. In any case, the market, as you can see, gapped up Thursday, and it was a pretty sizable gap. And it moved up and actually closed strong, which was an indication, closing at its very top. Let me blow this chart up for you. Okay, right here, closed at its highs on the day, very, very nicely, above all this area of consolidation to the left, and people were not fearful of holding over the weekend. Monday was a little bit more of a choppy day, up, down, and had a little bit of a topping tail, as you can see. And today, however, we closed with a pretty nice red bar, a larger topping tail than a bottoming tail. Now, the reason I'm spending a couple of extra minutes on this chart, folks, is because when you scan and look for potential trades for tomorrow, let's say the market were to gap up tomorrow or become bullish sometime during the morning, you should have, if you will, a list of those stocks that had relative strength to today's activity. So in other words, you want to find something that did not move down and close like this red bar. You want to find something that obviously has a little bit better looking bar. So, for example, this is a little bit better looking bar, right? Doji bar, closed in the top 30% of its entire trading range. Certainly has relative strength to the market. Not suggesting that you jump into this and hold on to it for a long time. Certainly in a very strong uptrend. You can see that. So perhaps if tomorrow were a bullish day and you wanted to trade this for some reason, intraday, take some money out of it, potentially this could be one that you would want to look at. And you would go through the list of stocks that you have. Now, this one closed relatively the same as the market. Also, you have a very, very big climactic move on two bars, Netflix. You're all familiar with that. I joked with my graduates today that I worked with in coaching, and I said, I told my son there was a news event that came out on Blockbuster who my younger son was assistant manager at some years ago out of high school, and told him that it looked like Blockbuster may not make it according to this one article. And so my older son, on that day, 3 days ago, when it moved up as rapidly, he happened to close his Blockbuster account because of what I told him and opened up a Netflix account. So I'm going to tell him that he must have caused that. But anyway, we obviously want to be objective. It moved up. We could have taken it right here as a hold. This is a wonderful trigger for us at Pristine. Beautiful, what we call minor pivot 1, a little shallow pullback on low volume. And we could have entered on this stock on Thursday and taken advantage of this very, very nice $5 move and then gotten out on the topping tail as we began to see some weakness. So whatever form of trading you want to do, and by the way, you could have traded the stock on this day and this day with exceptionally tight pattern. And that is exactly one of the mysteries of trading properly. In other words, you didn't have to buy this and hold on to it for a couple of days if you didn't want to, although certainly you could have. You could have bought this during the day and taken small pieces out because there were wonderful opportunities on Netflix on a variety of different charts. We were looking at these today in coaching, in fact, and everyone agreed that it was just a sweet-looking chart and patterns that we teach that you could have gotten into one here and exploited it for $1.50. On the other very bullish day, there is a pattern here that we teach. Another one here you might have gotten into. Over here, you could have bought this. And, you know, you could have made a whole month's of income just trading this one stock symbol on 2 days where it was in the right condition to trade it. Again, you don't have to buy and hold it for multiple days. You don't even have to buy and hold it all day. You can get in and out with a very minimal risk and then take your trades accordingly. The point is, you need to find charts that are exhibiting equal to or relative strength to the market direction that you are anticipating the market to go. You must create both an up list, meaning a bullish list, and a bearish list. You must do both. That's another DVD I hope to record sometime on scanning in universe, but I'll get to that sometime maybe later this year or next year. So the point is you must have a plan so that way when the market opens up in the morning, you are knowing what action to take. So now, on that note, obviously I can't spend as many hours as I would like to be able to show you how to make a complete universe and list and do all that. We do a lot more of that in our courses. But the point is, you must be selective. You must have a plan. So if you're going to get up in the morning and you are going to watch Netflix on this day, on the 9th, you are going to watch it develop in real time with a pattern, bar by bar, waiting as it develops. Too extended, too steep. No, can't do it. Not going to buy the pullback anyway because it's too steep. I'm going to wait now to see whether or not a green bar forms. Give me a little consolidation, a bottoming tail. Maybe I'm going to jump in there above $45 and take it up for about 30 or 40 cents. Why? Because I'm looking at this previous pivot move, measuring that against the anticipated objective on this next move, using common sense and probabilities to measure the average moves, which is what my DVDs go into, to be able to do a trade such as this. Now, when you are preparing for the morning, so let's go ahead and plan as if we were this morning, okay? Let me bring you back in our time machine to yesterday evening and then this morning. As we are looking at the market, it is critical for us to have a bias. So let me go back to the SPYs again. And let me go ahead and tighten this up a little bit. Whoa, that's not what I wanted. Wrong direction. Hold on. Let me do that. And let me hit my F7 button, F6 button. There we go. All right, so going back in time now, we're looking at the market as though we were looking at it this morning before it was opening. So when we analyze the charts, first of all, we want to always consult with our 60-minute chart. We can see that the market, as you can see, is opening in an area of relative support. So we're going to watch very carefully how this first bar forms early in the morning to make our decision. We're not really ready to just short anything because we are in an area of relative support. So consequently, we're not just going to say, oh, gosh, market's gapping down, let's go short. Contraire, my friend. I am now looking, in fact, to see whether or not we might trade into the void above. So now I'll show you a 15-minute chart, and we're doing all this pre-market. We do this every day, and we will do this 3 or 4 times together in that class I'm talking to you about with homework assignments to make sure I'm critiquing what you're doing. So in other words, I'm going to take some of you and give you some special attention to make sure that you are looking at this in the right way. So here, what we're going to do in the same chart is mark off an area of support. And I think some of you will be quite enamored by this because you'll see, wow, we gapped down and moved down just to support right here. So unless we broke below this area, there was no reason for anybody to panic and get out. But if we did break below and started trading aggressively below these lows, then we're going to start taking people's stops out, and we're going to absolutely start to see the market move down into this what we call tradable void. Again, that's part of my DVDs that I posted information for you earlier. Now, knowing this, my bias this morning, knowing that I would probably hold this area, the probabilities were high that I would hold this area, knowing that we gapped and went down to here, knowing that I had a void up into this area here, okay, even though we traded above it, we didn't trade above it with enough bars for my liking. We teach this in TPM too, and I'll be teaching it to a great group of people this weekend, of whom many of them I already know. We would understand that there wasn't enough time to really resolve this many bars, okay, only moving up such a climactic way. So although we did trade up above this here, I wanted to be giving me a few more bars to allow these people to understand it. They really didn't have enough time to really react because it went up so suddenly at the end of the day in the last 45 minutes or so that when we gapped down today, we caught them off guard. Now, the fact that we caught them off guard and that there wasn't a lot of follow-through and selling to the downside because this is a support area was indication that this was going to be a long morning. And so I look at the market and I go, wow, I've got my long list ready to go. I am really going to be prepared for this. In fact, I love trading relatively strong stocks in a weaker market because the shorts that are in the weaker the shorts that are in the stocks that are gapping up, they're not stupid. They go, hey, there's something wrong with this picture. The market's down 120 points, and this stock gapped up against the market. Now, what would you do if you were them? You'd cover your short. And so knowing the psychology of how people would react to this type of activity, we then put this and apply it into our techniques, and I'm going to look for the market to either stabilize or turn for me at the time that my pattern is going to work, okay? Now, someone just asked, and normally I don't ask questions until I get through the introduction part, but someone asked, what do I mean by resolve? The resolve is essentially I have to give enough time, enough bars subsequent to where we traded before to be able to give people a chance to make a decision as to whether they want to get in or get out. The more bars that go by, okay, obviously people are ruminating about, well, wait a minute, I bought up here, what should I do? I bought all the way up here, and so obviously they're waiting to see whether or not we go down lower or whether we're going to go up higher. So we need time for them to resolve their financial futures, if you will, and to make a decision as to whether they want to get in or get out. Now, in this case, again, knowing that I've got support, I drew it a little bit too low, but knowing that I have support in this general area right here, actually, that I'm thinking really more bullish. So I'm going to wait now on my shorter term time frames during the market. So as you look at this information through my eyes, okay, through what I'm looking at, we'll look at it in the spiders and we'll look at it the Qs. This is what we're looking at now. This is the same spiders, but in a smaller time frame. So here you can see we had a fluid little sell-off at the end of the day. But remember, don't forget, what did yesterday's bar look like? Let me just remind you, okay? This is what yesterday looked like. Very bullish day, closing nearly on the top of the day. Remember that. Everyone was pretty okay. Very small little wick or topping tail. So only the weakest of people got out, and it pulled right back into a support area, but very quickly. There was no real super panic, just the weaker people getting out. After all, we moved up very quickly at the end of the day after the bond market closed, and then we moved down very quickly, just with the shortest of traders wanting to get out and not hold. So in this case now, we caught a lot of people off guard, and you would think that by trading under all of this would create widespread panic. But here is an example of that this general area held. So I see whoops, I didn't want to move that up there. Sorry, folks. Let me get that down there. Okay, not one, not two, but three bottoming tails here. This one's a little bit more neutral. It's got a topping tail here. But watching this action where we cannot break down lower into the void is an extremely bullish indication. Now, you could have taken trades as early as this time frame right here, and you could have taken this right up to the resistance area and been able to trade during that time if you are a micro intraday trader. What if you are trying to buy and hold all day? Why not time your trade knowing that you can be much more reliable taking your trade at this time when the market is obviously in your favor? Now, if in fact you were a little reluctant to take this move here, you certainly could have bought the first pullback. Now let me show you how this looks on the Qs. And you're going to see a slightly different picture now. And you're going to see that the Qs didn't really pull back right away. So our technicals, in other words, our the more technology-related stocks in the NASDAQ were showing relative strength to the market. So honestly, you could have taken, which of course would be the right thing to do, is to take a beautiful pattern on a stock that had relative strength, that was trading beyond and above what this chart looks like at the time when the market was breaking out here. And then again, when we pivoted here. Now, in coaching today with my graduates, my students, graduate students said, well, what about that red bar, Ron? Usually a red bar after a move up ignites a move to the downside. And I said, yes, that's true. However, we did put in a wide range bar in an area near support, not only on the 5-minute, but also on the longer time frames. We then had a no follow-through bar, which is another thing we teach in our more advanced course I'm teaching this weekend. And then we can see we started penetrating deeply into the red bar, which was a very bullish indication that we were going to rally and make a new high. But we only went up to that area, right there where the previous pivot ended from yesterday. So at that point, these people that were stuck here were very anxious to get some of their money back. Now, understanding these very rudimentary ways of reading the charts, and by the way, it won't take you much more than 3 to 6 months or so to work with us. You'll work with me in coaching almost every Tuesday. You're going to have plenty of charts to look at. You're going to definitely see what other students are looking at. It's not uncommon for me to be working with 100 graduates on every other Tuesday, and our more advanced graduates, usually we have 60, 70. I'm working with the other alternating Tuesdays like I did today. But once you get the hang of this, your whole world will open up to you, and you'll start taking extremely reliable trades. Then your profitability should start to soar immediately. I mean, once you connect these dots and use this information, it did for me, and it has for hundreds, if not thousands, of other students that we've taught. So understanding this, I'm not thinking short at all. I'm thinking long on the breakout, long as I pull back here with my bar-by-bar analysis. Then, when I come into this area of resistance, I have to wait. Now, my next sign as I evaluate what's happening is I have a little pivot here, and you can see that, okay? I'm going to clear that right now. We have a little pivot right here, okay, and we couldn't make a higher high. And this is a relatively shallow pullback right to support, right there. Minor support, we call that. So when I broke up above it, what was resistance now becomes support. What was the ceiling broken now becomes support. I couldn't hold the support area, and a pivot didn't work. I have to now be thinking, stand aside, Ron. Wait. You don't know if there's a big enough void to trade in this area. Maybe for some of you that's enough. Okay? And now you've got to analyze again. Now, as you begin to see this pivot form right here, and once again, it's such a shallow pivot, it's like wimpy, and there is no chance of it going higher, you have to now be thinking short in this area. If you don't want to short, our students know this right here, let me clear it, this right here, what we call pristine sell setup, is going to be your most and best, highest probability trade in existence. We have a very shallow retracement. We are now, as you can see, in a downtrend, and this would be your best and most probable trade to take on the day. So let us review quickly how we see the development of the day. First of all, we measure by putting a line in, not because of that pivot there, but because of that. We're putting a pivot in yesterday's closing price, okay? And we are now going to measure the void, okay? We obviously have a huge void to the downside, and we know if we break down and go into the abyss, that could be a problem. But we didn't. Just like the spiders, we put in a bottoming tail, another bottoming tail, and we can see we made a new high over the 5-minute. And what? The Qs were making a relative strength to the spiders, slightly. Now, you will notice, okay, that this move, let me get rid of this here just for a second. This move right here at 10:10, write that down if you want to, 10:10. No smoke and mirrors here. Okay, 10:10. And we take a look at this pivot right here, and what time is it? 10:10. How about that, huh? You will find the markets generally move in tandem with each other. As we just said, the Qs, or the stocks in the NASDAQ, okay, the more technology-laden index, okay, showed relative strength. So the NASDAQ chopped around and went up, whereas the spiders in the broader market pulled back, put in a beautiful reversal, came up, put in another couple of bar pullback, and then at 10:10, right when the Qs were going up, we powered up, and then we started to fill the gap into the void, which is your best trading opportunity. Now, knowing these things and having your plan ready, in other words, you're going to have this plan, but you're also going to have your abyss plan. You're going to obviously have. Let me get the tool back here. You're obviously going to have another plan, which is that if we make a little shallow move here and come down and retest this area and then go up and then come down again, that you are going to have that plan to go bearish. So you must have a plan ready to go short and long. Now, naturally, you want to have your long list ready, those stocks that are trading with relative strength beyond what the market is doing, and you also want to have your weaker stocks, so if the market should demonstrate weakness, you want to obviously be going where nobody wants to be. So your plan would be, obviously in this case, to be watching the market as it's unfolding. You could be getting into a trade here, getting into a trade here, then you have to step aside because of what you see here, okay? And you also know there's resistance above to the left. When you can't make any follow-through on these pivots, we're pretty certainly going to go down, but you don't need to take action until right here, okay? That would be where you would take action. So let me now just summarize again one more time, is you could take, more aggressive traders, one trade in here, another trade in here. Then if you're really a conservative trader, you wouldn't go short again till here, and those would have been the 3 best times today to trade. There's a misconception that people think they can open up their computers, and the moment they decide to go ahead and start looking at charts, they're going to start pulling up Baidu, Google, Apple, RIM, and you know the drill, and they're going to feel that they can just jump into a trade and become instantaneously profit. Not so, my friends. The real art and true ability of becoming a professional trader is to know that you are timing your trade in close proximity to when the market pivots. And by doing so, you will then become a really expert trader. So now, let's go ahead and take a look at some possibilities that we're going to trade today, because we have already established a potential bias on the long side to trade, obviously, in the first hour. Now, a lot of you might be looking at the red ink and going, whoa, all red day. We're down 100 points, the Nasdaq's down 30, the S&P's down 10, or whatever at the point you were looking at it. And you're going to be concerned, or maybe you're thinking, with all the commentary you're hearing on CNBC, you're scared and that you're going to, the market's going to implode and we better go short. Well, I don't view it that way. We at Pristine look at everything totally objectively through the eyes, again, of technical analysis. So understanding this and having a long bias as I do, I'm very excited about this type of trading day, because I'll make most of my money trading long in a relatively weaker market environment. So now, I have scans here. Now, first of all, let me show you a couple things, okay? And of course, in my classes, I slow it way down because we have more time, and I want to honor the time commitment and try to respect your time as much as I can to hold as close to the 90 minutes as I can. And I see I still have about 20 minutes or so I think we're all right. We have what's called in the software program, this is called Realtick. I've been trading with Realtick since 2000. There's a little bit of a learning curve. That's why Master Trader and Pristine is going to be offering a very select group of people an opportunity to trade with the system for 30 days, 4 weeks actually, with lessons and such to be able to get the hang of it.